Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patrons, Greg W. and Danny M. Thank you for choosing to support the channel. I think most of us here are not, but if you're still in the camp that doesn't really realize how much the media dislikes Elon, well, I think now's a good time to look around and see that something doesn't add up. Elon chimed in saying, "This really opens your eyes. If they're this wrong about Tesla, what subjects are they actually right about?" The truth is, this type of thing has been going on now for years, and it's actually part of the reason why I started Electrified in the first place. We talked about the new rear-wheel drive Model Y that was available in Canada last week, and it turns out it is actually going to come from Shanghai. This will be the first time that Giga Shanghai, Tesla's main export hub, will actually export to North America. They're saying Giga Shanghai started making this Model Y for Canada earlier this month and that they're targeting producing 9,000 units this quarter. As we touched on last week, this should confirm that this vehicle will use the LFP packs, and this is the lowest cost structure factory that Tesla has, Giga Shanghai, so shouldn't come as a huge surprise. And don't forget, toward the end of last year, Reuters said Tesla was considering exporting China-made cars to the United States, to which Elon said false. So technically this is true because these cars are going to Canada, not the United States. But for anybody hoping this rear-wheel drive variant comes to the United States, I don't know. You may have heard last week there was a shareholder group that got together and wrote a letter to Tesla and the board basically saying, over time we've grown increasingly concerned with governance and leadership issues at the company, although this entire group of investors only owns collectively less than 1% of Tesla shares. They said, due to the board's failure to restrict the CEO's outside commitments and ensure he's focused on solving the many challenges the company faces, we've lost confidence in its members. I'm not sure too much will actually come of this, but I did think that this group was an odd collection of investors, to say the least. I'm not going to play this entire clip, but the takeaway is that Rogan was essentially gushing over the Cybertruck for over 2 minutes.
Dude, let me tell you something. That is the coolest vehicle I've ever seen in person in my life. The Cybertruck from Tesla. It's a stamped steel, electric, all off-road vehicle that's bulletproof. It could stop a 45 round. You can raise and lower the height so you can off-road on this thing. It looks like it's 100 years in the future.
Tesla's 10Q came out this morning for Q1. I have not had a chance to go through the full thing, but I found a few quick takeaways. Dating back to the spring of last year, Tesla has been guiding for between 5 to 7 or 6 to 8 billion dollars in capital expenditures every year. Well, now that number has been bumped up to 7 to 9 billion dollars. And here's the fact check. We currently expect our capex to be between 7 and 9 billion dollars in 2023 and in each of the following 2 fiscal years. Tesla said, "Our business has recently been consistently generating cash flow from operations in excess of our level of capital spend, and with better working capital management resulting in shorter days sales outstanding than days payable outstanding, our sales growth is also facilitating positive cash generation. We have and will continue to utilize such cash flows, among other things, to do more vertical integration, expand our product roadmap, and provide financing options to our customers." The financing options to customers both on the automotive and on the energy side is something Tesla has been doing now dating back to last year, but it sounds like they may expand those operations. And that's not to be overlooked if Tesla can put together a more competitive offering given the challenging interest rate environment right now. And we finally get some color on how the Inflation Reduction Act is going to hit Tesla's financials. They said further, the average combined cost per unit of our vehicles increased year over year due to increasing prices of raw materials, manufacturing, logistics, and warranty costs. These costs, however, were partially offset by manufacturing credits earned as part of the IRA during the first quarter. So it sounds like the Inflation Reduction Act impact will be seen on the cost of automotive sales revenue line and potentially the cost of energy generation and storage revenue line. And just a note for when they said gross margin for energy generation and storage improved from negative 11.7 Q1 last year to positive 11% in Q1 this year, which was mainly driven by the growth in energy generation and storage revenue Don't forget, these deployments may actually trigger when these megapacks are actually connected to the grid, but part of the revenue recognition for these projects may actually be delayed by another few quarters because there are certain milestones in these megapack contracts. And here's where Tesla shares the numbers for the deferred revenue for energy generation and storage. As of the first quarter, deferred revenue for this category amounted to $770 million, mainly due to billings for milestone payments. And they said at the end of quarter one, the total transaction price allocated to performance obligations that were unsatisfied or partially unsatisfied was $209 million. Of that amount, Tesla expects to recognize just $12 million in the next year, and then the remaining over a period up to 25 years. So yes, there will be a deferred revenue trickling onto Tesla's financials now from the energy generation and storage, just like we've now seen for years with Tesla's FSD. I may share a bit more on this later in the week as I have time to work through it. What we have here is Tesla offering Model S and X customers that have unlimited free supercharging to actually upgrade to a new Model S and X and still keep 6 years of unlimited free supercharging. But of course, they have to give up the free unlimited supercharging on their old Model S or X. And this is only to upgrade to a new S or X, not a 3 or Y. If you choose not to trade in your old Model S or X vehicle that has the unlimited free lifetime supercharging, you're basically going to be asked to sign a form to give that up to take advantage of this new promotion. This program could go away at any time, but for now, the scheduled end is June 30th this year. This is essentially trading in lifetime free supercharging on an older Model S or X for a brand new Model S or X with 6 years of unlimited free charging. Maybe Tesla is getting a taste for the profit it can generate with the supercharger network, because if you look at quarter one numbers for the services and other gross margin, it was higher than any quarter last year. Now, this segment is mainly driven by Tesla used vehicle sales, but this is where the supercharging line falls as well. In case you missed it, Friday, Tesla was handed a sweeping win in what was one of the first trials regarding Autopilot. The jury awarded $0 in damages, and they confirmed that the airbag did not fail to perform safely and that Tesla did not intentionally fail to disclose facts like was alleged. A professor at Georgetown Law called this a huge win for Tesla. And sometimes these early cases can give an indication of how later cases are likely to go. There was a really nice news segment for TR in South Carolina talking about the police department buying 2 Model Ys and how over time they're going to be more cost effective and actually save the taxpayers money.
And these cars are very quick to catch someone. So when we need to catch the violator, we can catch them quicker in these cars. We anticipate 4 to 5 years that extra that we paid up front will equal out in what we would have spent in fuel, oil changes, etc.
Morgan Stanley put out a new Tesla stock note just saying that last Thursday they held a bear bull lunch with 36 attendees, and they asked them by a show of hands who believed Tesla's share price would outperform the stock market over the next 6 months. Not a single hand went up. And a few of their thoughts: the price cuts are not over yet, and maybe more importantly, Morgan Stanley pushing on this point that Tesla's price cuts may actually force legacy automotive to be more austere when it comes to their EV spending plans. So if they do tighten their belts and spend less to transition to electric vehicles, well, I think that of course is only going to benefit Tesla. So with the sentiment around Tesla and around interest rates and the economy where it's at, we could have a pretty nice window of accumulating Tesla stock over the next 6 to 12 months. You guys know I like to highlight people putting out useful content, so Dan Corral, well done with a chart of Tesla grid storage deployed by quarter. And again, just remember, just because the deployments are hitting Tesla's financials does not mean the actual revenue recognition has hit the financials yet. As Farzad and Elon were saying about Tesla stock, there have been several extended periods of flatness followed by rapid rises to new plateaus, which is essentially exactly what I was pointing out in November of last year with this tweet right here. Going back a decade, there have really only been 5 distinct phases. We waited, and then in a year things ran up. We waited longer, And then in a year, things ran up, and now we're waiting. And that whole Tesla is unprofitable and doomed without regulatory credits narrative should be dead, because yes, over the last 5.25 years, regulatory credits only made up 2.7% of Tesla's overall revenue and only 11.8% of Tesla's gross profits over the same time period. You can find me on Twitter at DylanLoomis22. Hope you guys have a wonderful day. Please like the video if you did, and a huge thank you to all of my Patreon supporters.